A brand new space fund just jumped almost 50% in 8 weeks. So why are most of the companies inside it still losing money? Let's open up ORBX and see what you'd actually own. ORBX is the global X space tech ETF. It launched on April 14, 2026. It trades on the NASDAQ, and it holds about 36 space companies in a single ticker. The pitch is simple. Own the commercial space economy without picking one rocket stock yourself. And the timing has been loud. Since it launched, ORBX is up around 47%, with a 44% gain in just its first month. That run is riding excitement about space going public, especially anticipation around a possible SpaceX listing. New money is chasing anything with a rocket on the label. Here's how the fund actually works. ORBX tracks an index of companies tied to the space value chain: rocket launch and reusable rockets, satellites and components, space-enabled data, and orbital services. Each holding is weighted by size, with a cap near 20% so no single name can completely take over. Now here's the catch, and it's a big one. ORBX is extremely top-heavy. Almost 19% of the entire fund sits in one stock, Rocket Lab. Another 10% is in AST SpaceMobile, and roughly 8% is in Planet Labs. That means just 3 volatile companies drive about a third of your return. This is not a broad, diversified bet. It's a concentrated wager on a handful of young space names. And about that headline name everyone wants. SpaceX is private. It is not inside this fund, because you generally can't buy it in a public ETF yet. So if you're buying ORBX hoping to own SpaceX, you're actually buying Rocket Lab, AST SpaceMobile, and Iridium instead. Know what you're really getting. Why does this matter? Because most of these companies are still early. Many are not consistently profitable, which is why the fund's forward price-to-earnings ratio sits in the hundreds, far above the broad market. You're paying a premium for growth that hasn't fully arrived. And there's no income cushion. The 30-day yield is actually slightly negative, so this is a pure growth bet, not a dividend play. The performance shows it in both directions. Yes, ORBX has soared since launch, but on a single recent day it dropped more than 9%. That's the trade-off with concentrated high-valuation space stocks. The moves are huge on the way up and just as huge on the way down. A fund that rises 44% in a month can give a big chunk of it back fast. So who is ORBX for? An investor who believes the commercial space economy is the next big theme, wants one-ticker exposure to launch and satellite companies, and can stomach gut-wrenching swings without panic selling. It's a small slice of a portfolio, not a core holding. One honest reality check before you decide. ORBX is tiny and brand new, with only around $54 million in assets and barely 2 months of history. That means thin trading and an unproven track record. Promising theme but high risk. If this breakdown helped, hit like and subscribe for more ticker-by-ticker ETF deep dives. And tell me in the comments, is ORBX a real space bet or just SpaceX hype with no SpaceX inside? I read every reply.